Hey, what's going on? And good morning from Trading Options Network. Pretty interesting morning so far, but as always, got to go ahead and do the disclaimer here. Everything is for educational purposes only in this video and is not the opinion of Trading Options Network. So do everything with the information what you will. That being said, of course, make sure to like, follow, and subscribe on your favorite social media platform. But let's go ahead and get into what we are seeing this morning so far with our previous trades, any potential new trades, so on and so forth. So let's go ahead and get my purty face up there. Hello. All right. So as we can see here, market's not doing much today so far. I wouldn't even say it really gapped up. Let's see. We opened today at 548.68 when we closed yesterday at 549.01. So pretty much flat. I mean, we could say we gapped down ever so slightly. But that really doesn't mean anything, that little bit of a move. But again, we haven't really done much throughout the day so far today. Just up very, very little. Could it be because we have a holiday tomorrow and there's not a lot of people out there trading? That's very possible. Are there more people wanting to see if we break through this previous resistance? That's also possible. There's a combination of things, but the bottom line is, you know what? It is looking still very bullish. We could very, very easily break through sometime today and then go on to new all-time highs. But we'll see. We'll see what happens. You know, we could very easily just roll over and die. I mean, who knows? That's the fun thing about the market. It's never going to let you, make money easily, to say the least. Let's look at the heat map here really quick. Of course, NVIDIA and Tesla and Broadcom, are freaking green as heck. Broadcom's always been one of those highly volatile stocks. Apparently, especially in the last few weeks. Haven't looked at that, but nonetheless, NVIDIA up 2%, Tesla up 5%. Tesla is just ridiculous right now. If we take a look at Tesla, I mean, I'm actually shocked that there's been a pullback today because it just didn't seem like it wanted to stop. It just wanted to keep on going and going and going. It's like the freaking Energizer Bunny right now in here. But, yeah, it's, in my opinion, would probably, I'm not going to say it's a good opportunity to, put on a put or short it in any way. I just think that would be very stupid because that movement in and of itself is kind of stupid. But I'm putting on the Bollinger Bands. Look how far outside of the upper band it is. I mean, that's insane. So we should expect it to come back a little bit, or at the very, very least, consolidate and move sideways and let the upper band catch up. Let the 20. I mean, gosh, it's way so overextended. It's pretty nuts. But that's Tesla for you. Any other stocks that are moving? Amazon's down, Eli Lilly is down, Microsoft, Apple, Google, they're pretty much all flat. JP Morgan slightly down. Walmart, Costco are down. So truth is, when I'm looking at this, it does look to me like we're about 50-50 roughly. I can't see exactly, but I would say it's about 50-50. So let's go ahead and look at some potentials. You know what? I don't do this very often. I just want to see what stocks could potentially be out there. So I'm going to go ahead and we're going to do a descriptive / technical screen here. I'm going to go ahead and move myself over just a little bit. You can see right here, right there, obviously we want optionable, okay? So we want that there. Price, since we are not Filtering from a specific sector, we definitely do want to go over $15, if not even over $20. Average volume, of course, over 2 million. It's always going to be over 2 million. Earnings date. Again, I want to avoid anything that's in earnings anytime soon, although earnings really doesn't start till next week and the week after, so we should be okay for now. We'll have to double check. If we do see something we like, we'll obviously have to double check and make sure they're not having the earnings. Let's go over to technical here. Being that we are in a bullish market, let's look for a bull. So I'm going to go to the 20-day simple moving average, and I want to see the price above the 20-day. I want to see the price above the 50-day. Let's see here. What else do we want? We want, excuse me, RSI. I'm not worried about volatility. 200-day moving average, I'm really not worried about either. How about an ATR over $1? We don't want something that is not moving at all. We could even do like $1.50. Most stocks that are going to be over $100 should have an ATR over 1 for sure. That's beautiful. Let's see here. Performance. I'm not worried about today's performance. Volatility. I'm not really worried about that right now either. We'll see the volatility from the charts itself. So I think we're pretty good here. I'm not going to look for any specific patterns. Yeah, I like this. Let's go ahead and see what we have. We have 143 potential stocks here that are going to be bullish, that are both over the 20 and the 50-day moving averages. Now, of course, we also want to see the moving averages moving upwards in an upward trajectory, and we also want the 20-day to be above the 50-day. Okay, that would make it the ultimate bullish setup. So let's go ahead and look at some charts here. See what we got. Alcoa here, the top one. Not super liking it. If we look at the 20-day, I could see it right there. The 20-day is definitely moving down because of this last gap down. Here, let me just go ahead and open it up just a little bit more here. So, again, not super liking this one. I don't think it's that great of a setup. This is one heck of a pullback. And, again, it could be a great opportunity for certain buyers. But this is not the type of technical trade that I am personally looking for. Apple, on the other hand, that looks very, very good. But, of course, Apple's been nuts lately. So is it one that I want to get into right now? Probably not. I would definitely much rather see the ATR come down a little bit first and foremost. So this might be a play, in a couple of weeks, truth be told. I want this to consolidate some. I want to see this type of action here where we had, ranges of what? Let's see. ATR down here was just over $3, whereas this one, this was insane. $14. Yeah, $14 move. This had a range from the high to the low of $14 as well, just about. That's insane. And then, of course, these bars, it's moving crazy. Why do I not want to get into a trade while it has all this movement? Well, because the volatility is so high in Apple right now, that's going to cause the premiums to be significantly higher as well. So right now, technically, I guess you could say, I don't see this going up to 225. Let's just go ahead and take a look here. Oop, it's on the wrong screen. Let me bring it over. I don't know how I got on that screen. That was random. I minimized it, so when I maximize it, that's so weird. Anyways, let's go ahead and I'll put Apple on the bull watch list because obviously it is very much bull. Let's go ahead and pull up our green charts, which is down here. We're going to maximize the sell. So again, we have a very nice, actually, setup here. I do like it, but again, the problem with all this volatility that it's had in the last couple of weeks is going to be causing the premiums to be a lot higher than they probably should be. Let's go ahead and change this to green. Here we go. There's Apple. So let's say because we have such high premiums, higher premiums. I mean, the stock price is at 220 right now, 220.58 to be exact. But yet a 220 call that expires next week is over $3. So that's, in any given situation in a quote-unquote normal market, that is a relatively large move to be had in 6+ trading days just to get into the money. Okay, so, or I should say to break even. Technically it's already in the money, but to break even. So I don't like that. However, let's say we don't believe it is going to get to the 225 level. And I don't recommend this trade. I'm not going to open this trade. I'm just looking at it just for fun. But the 225 strike for 9 days out, 9 trading days out. I'm sorry, these are actually 9 calendar days. I forgot Thinkorswim does 9 calendar days. But we're looking at $1.20. Now we could go all the way to the $1.30, the 230 strike, and then we can actually buy that call. So we could sell the 225 and we can buy the 230. Now you're not going to get a ton of premium here. You're not. So again, this is not a trade I would do, but if you truly believe, if you see something in the chart and you're like, you know what, there's just too much resistance here. It's way overbought. Well, in reality, according to the Bollinger Bands, because we had these 2 massive days over here, it's still within the Bollinger Bands, so we very easily go higher. So again, this is not a trade I would do. Can't stress that enough. But if you're the type of person that just feels like this is overextended, we could even argue here, we have a higher high here. But yet the CCI is making a lower high. So that's definitely some bearish divergence going on right here. So you can say, I'm going to be bearish, or not bearish. I just don't think it's going to go up any higher. So you can be even neutral to bearish. And again, you go ahead and you sell the 225s, or you can even do the 250s, get a little bit more premium, and then buy those 230s as essentially protection, almost like insurance. But that would be something that some people would be looking at and wanting to do. I guarantee people are making that trade right now because they think Apple is just too overextended and it has gone up too much too quickly and it needs to have a longer pullback. For myself, I want this to consolidate, just go sideways a little bit more. I like this bar because it's more in line with a lot of these bars back here. So it looks like we are kind of getting back to normal in terms of at least how today is looking. So if we do that a few more days and the 20-day extends up to this level, then that's when I am going to be getting more bullish. Okay. But until then, I will just leave this on my bull watch list. All right. What else do we got here? Airbnb. And we're not going to go through all of these. We'll just kind of look at a few of them. The 20 days below the 50-day, granted, does look like we're going to be having a crossover soon. So we have that crossover. ATR has declined, so you can almost say it's getting slightly squeezed. Look at how narrow these Bollinger Bands are because it has consolidated. But, or I should say it has been consolidating, really. I mean, it was consolidating pretty much straight across here, as you can see. But has recently started wanting to move higher. If we get a nice 20, 50-day cross here on the moving averages, okay, and we start taking off, then it's not going to be a short squeeze. Don't get me wrong. You can have a squeeze that's not a short squeeze. But because the Bollinger Bands are as narrow as they are, they'll want to, widen, and that'll cause the stock to move. The ATR will jump. I do actually like this. But again, I don't know if I want to open up a trade with it where it's at right now. So I'm going to leave this. I'm not even going to put this one on my bull watch list. And hey, you can tell me I'm stupid. Maybe you're seeing something that I'm not. I don't care. I'm telling you, that's what I am seeing and what I am doing. Let's see if we can find one that I really enjoy. AMAT looks pretty solid. Amazon is okay. Aflac, good old Aflac. Well, here's one. Talk about a narrowing of the Bollinger Bands. That is super, super narrow, and it's just waiting to do something. Who knows what? I mean, according to today's candle, it's just going to go right back down into the center here of the Bollinger Bands if we were to just look off of that one candle. But again, this is something we can put. This would have been a great neutral trade for obviously the last couple of months if you just literally kept doing like $61 butterflies over and over again. You would have been making a lot of money here because this just does not want to move anywhere. It's interesting. I don't do a lot of butterflies or why can't I think of what they're called right now? The gosh, it'll come to me. But I don't like to do a lot of neutral trades because it's not that they're hard, but if the stock does something you don't like, they can start becoming a little bit more difficult to manage, if that makes sense. Whereas if you pick more of one direction and it goes against you, just simply close the trade, right? You just simply close the trade. With a butterfly or... Why can't I not think? You know what? I got an idea here. Let's just go over here. Let's go back to the trade. Just click a random one. Condor. That's what I was trying to think. The iron condors or any other condors, really. I don't do a lot of iron condors. I don't do a lot of butterflies. Because, again, I just don't like having to manage them if the stock does end up moving one way or the other against me. So, yeah. I usually pick a side. I usually pick a bull or a bear. Anyways, let's go back over here to applied materials. Okay, I like this chart right here. We had a pretty solid move. Okay. Somewhat similar to Apple, but not as aggressive as Apple. Okay. Then we had a pullback. And now it's been riding this 20-day up. As the 20 days been going up, this has been going up along with it. It's almost like the 20-day has increased the support every single day for this particular stock. It's a semiconductor, of course. I'm willing to bet if I were to pull up NVIDIA's chart is going to look almost identical. Sure enough, look at that. NVIDIA did go ahead and drop below the 20, but again, it had that rush and then it dropped. And when NVIDIA drops, pretty much all semiconductor stocks are going to follow. So, Applied Materials is one of those where if you don't like the cost it takes to get into NVIDIA, even though NVIDIA did recently have the split, so it's a lot better now, Applied Materials would be one that you can look into a little bit more. So, this could definitely go on the bull watch list. Again, it's not something I'm going to do right now because we have a ceiling right here, right above it. I mean, you can target this for 247 maybe and say, yeah, I think it's going to go ahead and retest that level. And when it gets there, you can close the trade. But I don't know if I want to do that quite yet. It's not a bad trade. Of course, the more I'm thinking about it right now, the more I'm almost talking myself into doing that. I just wish I could see a bigger move, more price action on this bar. It's just too small for me. Granted, you know, it is only 2 hours into the session today. So what we'll do, if we can get a little bit more price action, then that one could potentially be a good bull. So I'll put that one on the bull watch list. There we go. Let's see. We'll just pick a random page. How about page 5? All right, GE. So GE is actually interesting to me. I recently had a bear play on this one because it just continued to go up and up and up and up and up. And to me, it started to look like it was starting to roll over here. So I actually got out of the trade right here, which, you know, thankfully I just didn't like this candle right there. It just seemed like it was, what do you want to call it? After a nice red candle, it just did not, it told me it didn't want to go any much lower than that. So, you know, I actually got out of it right here, and I'm glad I did. It's been going sideways since. It's up a little bit today. So GE can definitely be a bull. Okay, we've been pretty neutral, so we'll kind of want to see what happens with it. I'm not going to go ahead and put that on the bull watch list quite yet. I mean, obviously it can be, but I don't want to just put everything on my bull watch list because it can be. Let's see here. Honeywell. Honeywell's an interesting one because it has been doing nothing for the last few years. For the most part, it's been almost sideways. Look at that. I mean, 220. We did drop a little bit down here to 175. That was a pretty hectic drop for Honeywell, which is usually a pretty involatile, a non-volatile stock. So that was actually quite the drop. But again, I mean, it's right back in this range where it has been for a long time. If we go back longer, I mean, look at this. You know, all the way back till, you know, we'll call it late 2020. It's been in a relatively neutral state, okay? I mean, truth be told, 212.45. You know, 206, 208, 207, 206, 212. I mean, what day was that? December 9th of 2020. We're at the exact same point we were almost 4 years ago. So I'm not going to make this one a bull by any means, just simply due to the fact that, you know, it hasn't gone into new highs for almost 4 years. How about page 9? Let's see what we got over here. Reddit is too new. Does look decent, but it's just too new for me. What's this one? It matches my hat. Oh, the semiconductor ETF. That's right. Probably, I don't know if this one's going to be liquid enough, but of course I like the SOX, SOXX. This is a great looking chart, and that shouldn't be very surprising considering it's a semiconductor ETF, and Nvidia, I'm sure, is driving this thing. So, gosh, it even had a split itself, it looks like. 3 for 1. That's how you know when the ETF is splitting. That's how you know one of those stocks is driving it like crazy. But bottom line is, I mean, I really like this. So SOXX, let's go ahead and actually take a look before we do anything what the bid-ask spreads look like. We can go 16 days out just to get an idea. Oh, it's not terrible. 20-cent bid-ask spreads. It's not terrible. 30 cents. I thought it was going to be a little bit worse than that. What about if we look at August expirations? Yeah, 60 cents, 40 cents. It's a little bit wider than I'd like to see. Not to mention being that Nvidia is driving this. I mean, you're looking at something that's $2 out of the money right now, but it's almost a $10 premium. That's insane. So unless you wanted to do some kind of like a credit spread or something, you know, this would definitely be one that would be very, very difficult for me to get into, just for the simple fact that these premiums are very, very high. Again, it has a lot to do with NVIDIA. So maybe, let's see, if we were to do a credit spread, we'll sell some puts. Let's go back to the chart here really quick. All right. So if we think it's going to get back up to the 260 level, right now we're at the 253, and we could do a 250, 260 put credit spread. Let's see what kind of premium we would get. So I'm going to go ahead and go over to the 260. Actually, I only want to be on the July 19th. I don't want to go all the way to August. That's just too far out for a vertical spread. All right, so the 260 right here. If I sell this, I want to sell the vertical. Oops, I'm sorry, 250. I want to sell the 250. And as you can see, I'm selling the 250. I'm going to buy the 260s. Okay, so shoot, I did it backwards. I'm sorry. I want to buy the 250s and sell the 260s. So by selling the 260s, man, why am I confusing myself right now? I do everything off my phone, and I don't know why I'm confusing myself here. Sorry. If I am bullish, why am I spacing out? This is so awkward. If I'm bullish, I want to buy the 250s, 250 calls, sell the 260s, or sell the 260s and buy the 250s. Yeah. So that'll give me a $5.25 credit. Okay, I was right. Why was I second guessing myself? I don't know. It'll give me a $5.25 credit. So what that means is by July 19th, I should say, I'm expecting the stock to be closer to the 260. So the 250 put would expire worthless, and the 260 put would almost or possibly be expired worthless if we're above 260. So that's a $5.25 credit. That's not terrible. That's not terrible. If we go ahead and look at the chart one last time, we've already seen 260. We've seen 260, 65. Can we get there in a few days? Absolutely. So you know what? Let's go ahead and make this trade. I'm only going to give it a 1 on my confidence level, just because the semiconductor ETF, the semiconductor sector as a whole, has recently been quite volatile again, mainly because of NVIDIA. So I'm not going to go too crazy. I'll give it a 1%, or a 1 confidence score on my ETF, on my trades here, which again equates to 1% of the portfolio. So if we do 200,000 at 1%, that's 2,000. We're getting a $5.25 credit, meaning we are going to risk $4.75 or $475. So at 2,000, that's kind of easy math. We're looking at 4 contracts. Okay, I'm not going to do 5. I mean, I could technically do 5 because I'm not going to let this absolutely crush me. But again, if I did 2,000 divided by 475, it's going to be 4 point something, 4.2. So again, I'm going to do 4, not 10. I have my 4 there. We're going to get a $5.25 credit, meaning again, $4.75 is going to be at risk per spread. So let's go ahead and see if we can get this filled. Actually, the mid's at 525. Okay. So confirm, send. Let's see here. All right, we didn't get it yet. Gosh, working orders, 525. We're not getting it yet. Let's go ahead and see if we can get Now the mid is 535, and the mid went up because, of course, we went ahead and logged that. So let's see if we can get 530 filled. Nope. Oh, that's why I'm like, where to go? And actually, we're getting a credit, and we couldn't get 525. Obviously, we're not going to get 530. Let's go down to 520, see what we get. We're going to be risking now $4.80. Still doesn't want to go through. Oh, there we go. All right, it just filled. So let's go back over to monitor. Here we have it, SOXX. It is a bullish trade. We want to see this get to about 260 sometime in the next couple of weeks. We do not have to hold it now. Of course, if it goes over 260, you know, we can just hold on to it and hold on to it and hold on to it until it either expires or crosses back below 260. If it goes above 260, I'm just going to let it sit there. I'm not going to touch it because everything will expire worthless, will be at max gain. But if it's above 260 and then it starts dropping and we hit that 260, so this is something I'll keep an eye on. If we drop below 260, or if we go above 260, I'm going to put an alert that if it drops below 260, it'll tell me. And then I'll reassess the chart. And if I don't like what it's looking like, if I think it's going to continue to move down, if it looks like we're having a nice pullback, then I'm getting out of the trade. I'm going to take my profit and run. If it's just more like a consolidation or something and it doesn't look that bad, then maybe I'll hold it and see what happens. But the bottom line is I definitely, I'm not going to say it's glitching unless there was a massive move here in the last couple of seconds, but it says we're down $440. Again, that's what happens when you have these wider bid-ask spreads, is when you first make a trade, it's going to look a little goofy, a little wonky, but nonetheless, you know, I like the trade for now. Let's go ahead and we are going to put SOXX on our watch list. I mean, on our, not our watch list, our positions. So we have 3 bulls right now. We don't have any bears, we don't have anything neutral. Let's see if we can find a bearish setup here really quick. Let's go to the screener. Price over 15. Volume over 2 million. Technical, in this case, we're going to do below the 20-day moving average. It's the very top one. And then price below. And ATR, we still want it to be over $1. Okay. This gives us 122 opportunities. AbbVie's at the very top of that list, but it's because it's an order. If we actually go to performance, performance of the month, okay. Here we can look at some stocks that have been really, really struggling, but then we can see if maybe something has had a bounce, like CELH. CELH looks like it's consolidating / maybe having an ever so slight bounce. So this could potentially be a good idea. So here, let's go ahead and do this because we're already at about 30 minutes into this training, 33 minutes to be exact. I don't want to take much more of your time. Why don't we go ahead, let's everyone go ahead and see what we can figure out. And in this afternoon's training, we can find a nice trade on the bear side. Okay, nice trade on the bear side. So that being said, I'm going to let you all go do a little bit of homework, okay? I'm going to continue looking. I might even make a trade, in which case, of course, if I do, for all you Platinum members out there, you'll get that text blast letting you know that I'm making a trade. But again, you know, let's go ahead and see what we can find, see if we can all find a good bearish setup, and see if we can make a nice bearish trade that we can put on our portfolio. Okay, right now we have 3 bulls, no bears. Okay, we do want to be somewhat weighted. So that being said, hope you guys learned something. Hope you guys had fun today, this morning, and